And here's how the program works. Basically, what's going to happen is you're going to, based on those gross receipts, the higher they are in all likelihood, the higher the loan amount. It's going to be up to $500,000, okay? So you can get up to a $500,000 loan and get this 4% interest rate amortized over 30 years. Hi, this is Brian Icenhower, and I want to talk to you a little bit today about the different types of disaster relief out there for real estate agents that are now battling through some of the economic fallout and governmental restrictions being imposed on them as a result of the coronavirus or COVID-19. Because many agents are unable to work at the levels that they're able to work, depending on where they are in the country, for health reasons, being limited in their ability to perform their services to the fullest extent, and due to a lot of the economic fallout as a result of the coronavirus, the federal government and many state governments are now making available a lot of different economic resources that they want people in the real estate industry, as well as other industries, to take advantage of. So I think that's the first thing we need to say here is, these are not government handouts. So I think it's really important to get around that stigma. What they don't want is a bunch of businesses to avoid taking these handouts, right? They don't want that. And then they just kind of circle their wagons and protect and stay tight. That does not help our economy. Instead, what the government's hoping that we do is take and use this money and then spend that money, spend it on payroll, spend it on rent, spend it on whatever it takes to do business, depending on the program. And we stimulate the economy by putting this money in flow. So think of it this way. I mean, the government's passing trillions of dollars of stimulus. They need to know how to disperse that throughout the nation's economy. And they have chosen, as a means of stimulus, part of it, or significant part of it, to come through the Small Business Administration. Some of that's even coming through, different state unemployment agencies. That's how they're choosing to distribute this money, and they do want it to be spread around, so the quicker we can do it, the better, and not to mention, it often makes good economic business sense for you. So I think it's really important that you put on a business hat here and don't put on any unjust or erroneous moral hats about it at all, because I don't quite understand them if you are. And that's why at Icenhower Coaching and Consulting, we do coach a lot of the highest producing real estate agents, real estate teams, and real estate brokerages across America. And because of that, we're advising our clients to take advantage of this and to move forward and to be safe and get these funds distributed as we move deeper and deeper into what's going to be some economic fallout as a result of COVID-19. And we're at the earlier stages of it as I'm making this video right now, so who knows how deep it runs, but better safe than sorry, and that's my advice. So what I'm going to talk to you about is some of the different things, different programs that are available to real estate agents out there to help them, and brokerages and real estate teams as well too. And hopefully you can use those. So let's start with the first one, and that is actually unemployment, which is kind of interesting. I'm going to turn my screen around so you can see this. This is actually unemployment, and this is great for solo real estate agents that are unable to work or unable to generate business right now because of the economic fallout. And this is actually an example of the state of California's form. Okay, so this is actually the state of California, and it's different from everyone depending on where you are, but you're going to have to go to your state government is who distributes the federal economic funds. And most recently, here in early April, the government has started to distribute the CARES funds from their latest $2 trillion package. And through the Disaster Unemployment Assistance federal program that provides financial assistance to jobless workers and the self-employed, understand they are able to give this to independent contractors, meaning real estate agents. You do not need to be a W-2 employee that's laid off. So understand this is, no matter where you live in the country, this is for the state of California. They're going to go through the Employment Development Department in the state of California. Now, I don't have time in this video to go through every single state's unemployment program, but typically whoever is, there will be some state agency that is going to, in your state, that is going to be accepting applications for disaster unemployment assistance. So I'd Google that in your local state, your state government, and then disaster unemployment assistance, DUA, and it says, who is eligible. And it can be any unemployed worker or self-employed individual who lived, worked, or was scheduled to work in a disaster area. And most of the states have been declared disaster areas. Because of that, we are seeing, I'll take you back to me now, we're seeing that, since most of the states have now been disaster areas, we can now apply for that. So, again, there's going to be a rush of applications. So I would go ahead and apply for that, even though the funds from the CARES Act probably aren't quite available yet. Since it was passed just very, very recently. But I think there's going to be some lines. I think a lot of people are going to get involved with that, so I think you should. If you're an agent out there, a solo agent, I would probably get in line for those funds now because you do have that option available to you. I will tell you this, anybody who's watching this video, you really should be applying for one of these options. I'm going to give you 3, and that was the first one, right? The details of that, how long it's going to be, how much it's going to be, man, there are reports all over the place about it, so I don't really want to go out there and tell you, but I know something's going to be better than nothing. But they are talking, about, I've heard everything from $600 a week, which is phenomenal. That's $2,400 a month. I've heard that. I've heard $1,000 every 2 weeks. A lot of mixed numbers about that, and I'm sure you've heard some too. So I've heard so many, and I've said numbers to so many people. I'm going to stop before this goes to video because I've also seen as after they do pass these, they change their minds a lot as well too. So my advice is get in that and get that nailed down. And that goes for saying with any of this. All of these things I'm telling you, I'm going to tell you some other ones too. You might want to run by your accountant first to make sure. I don't think unemployment is going to be an issue, but some of these other ones you might want to run it by your accountant to make sure it's good for your business or your corporation or whatever entity you are operating under to receive these funds and get their opinion too. I think you need business advice and tax advice as well. So, I would run this by somebody else. I am speaking broadly across all of the United States of America, and there are different tax implications in different states that I don't know about. So it might be a good idea to run that by, but I do it in a hurry. I wouldn't be waiting around. Okay, the second program I want to run by you, which has been out for a while, and they have been accepting applications for probably 2 weeks now. This probably came out probably around March 20th. And then they have just amended it, and I'm going to show you that one as well too. And as I turn my screen around on that one, this is through the Small Business Administration, and I would recommend that individual agents try to apply for this. We have seen no proof that they shouldn't. Definitely, people that run real estate teams should. A team leader definitely should, and definitely a broker owner of a real estate franchise should apply directly through the Small Business Administration in the United States, right? These are loans that are being funded through the first stimulus package that was initially initiated by the federal government. And if we click on this apply for assistance, you'll see we're going to go into the disaster loan applications. Again, most states are now a disaster area. And we want to click on this economic injury disaster loans and loan advance. Disaster loans and loan events. That's what this started out as, just a disaster loan. And then right here in, just right at the end of March of 2020, the last few days of it, they actually amended it to include a loan advance of $10,000. And if we click on this, you're going to see that we come up with the economic injury disaster loan and loan advance. To apply, we just click here, and it's actually really, really easy. The loan application is very streamlined. This will probably take you 30 minutes, and I'm not going to go through the whole loan application with you, but I will tell you, you're just going to click, typically you're an applicant is a business with not more than 500 employees, and you got to make sure you don't use the money they give you for any terrible purposes. And, once we have done that, it's going to start taking us into the application itself, where we can actually start to answer some of the basic questions and filling out your business legal name. So if there's a red, we need to fill it out for sure, okay? Or an asterisk, we need to fill it out. And then once we turn them all green as we fill them out. Now there'll be some things that are kind of only if they apply to you, like do you have rental properties, or does your business, are you a nonprofit, things like that. Do you provide secular services or social services? Are you a faith-based entity? A lot of you aren't going to have those apply to you, so we don't need to fill those out. So be careful with those, right? And some things that I want to tell you about this application. So again, just to let you know, we're going to scoot back here. This is the SBA.gov COVID-19 relief, SBA.gov. So SBA.gov. It's /page/disaster-loan-applications. SBA.gov/page/disaster-loan-applications. Okay, it's really, really easy to find. It's just about everywhere where you can apply for this. And here's how this program works. I really like this one, actually. Basically, they're going to give you a loan of up to $500,000. That's going to be based primarily on your gross receipts. So whatever your gross receipts were for the last 12 months, we've really only got 3 months of 2020 on the books as of shooting of this video. So your 2019s are going to be pretty close to it, unless you've had a dramatically different start of this year. So they want your gross receipts, and if you're in real estate, that's typically going to be your gross commission income. Okay, that would be your gross receipts, is your gross commission income for the last 12 months. And then it's going to ask you for your cost of goods sold. Now, for a normal real estate agent, a solo agent, you're not going to have money of all cost of goods sold, right? You might pay a stager. These are basically costs that are associated with any type of sale that you wouldn't pay if you didn't have a sale. So, for example, if you pay a stager out of every sale, if you pay for a certain photographer out of every sale, those might be your cost of goods sold. We really want to keep your gross receipts up here kind of high. We don't want to offset them with a lot of costs. So don't go looking for cost of goods sold, because in real estate we just don't have many. If you're a real estate brokerage, you might. Now there you might, because you're going to have a gross commission income for the entire brokerage, and then from that income you take in, you pay your sales agents their portion of a commission split. So you're going to have a real big cost of goods sold, right? And the difference is going to be your net receipts, and that's what they're going to base the total amount of your loan amount on. So that's really high too. Nowhere on here in this application does it ask us in real estate for expenses. Okay, so don't be putting your expenses in here. Believe it or not, they don't want to know that. That's not one of the criteria on this loan app. So don't put that in. If you find yourself, the only place they ask for it is if you're a church, I believe. And unless you're a church, again, I'm talking to realtors, I don't think that's going to apply to you, so you're filling out one of the questions incorrectly. Read them close, read them tight, okay? So we want your gross receipts, your cost of goods sold, probably not much unless you're a brokerage. It could be a little bit more if you run a real estate team, because you are going to receive checks in and then pay out possibly to buyer's agents or listing specialists or inside sales agents on your team, their commission split. That's one way to do it if you do pay them out that way. But if you don't pay them out that way and you just take in only your portion of their split and only the income you've generated from your sales, and then your brokerage pays the other agents directly, or a title or escrow company or closing company pays the other agents directly, then you don't have to worry about it. So you can just use your gross receipts with no cost of goods sold, okay, if that helps you out. And then we want to have employees, okay? So any employees you have, this is where as a solo agent, you're probably not going to have many. I mean, you yourself, you can count yourself an employee if you are some sort of corporate entity and you yourself take a draw or a salary or something like that, and you treat yourself like an employee. If you're a real estate team, you have an administrative assistant, or anybody we're trying to pay hourly, I'd probably include them. Again, there's not a lot of clarity here on who to treat what. So I would probably, and from a general standpoint, I'd probably try to get my employee count up as high as possible for now, because I think we're going to have an opportunity to correct that if we're wrong later, but there's just not a lot of guidance as what to do. So I would try to get, because I think that they're going to want to help those with employees. And if you're paying someone partially per hour, like an ISA, and then partially by commission, even if you're treating them like a 1099, I think I would probably err towards the side of calling them an employee here to get that employee count up. We can amend that later, because I think we're going to get an opportunity to do that. So that's how I would treat this all the way through. And here's how the program works. Basically, what's going to happen is you're going to, based on those gross receipts, the higher they are in all likelihood, the higher the loan amount. It's going to be up to $500,000, okay? So you can get up to a $500,000 loan. And get this, 4% interest rate amortized over 30 years, okay? It's pretty crazy. And they say that could possibly be forgiven. I have not heard that for sure, so I wouldn't take that one to the bank on this program. Don't confuse this program with the PPP program that I'm going to discuss next, okay? However, this program, it is a very good program. I do like the fact it's a 30-year loan. I do like the fact it's 4%, and I like the fact that it can be very high. For most agents, it's the way you're going to get the most money at a relatively low, extremely low interest rate with lots of flexibility on use. You're not very limited on what you can spend that money on. Whereas with the PPP program, you are if you want that money to be forgiven at least. So I do like that aspect of it. The other neat part about this program is they're going to give you now, as of this week, I think it was as of March 31st, they decided they can give you a $10,000 immediate advance. And they're saying that's a matter of like 3 to 5 business days from filling this out. That's going to be in your bank account. In fact, at the end of the application, they ask for your bank account, routing number, bank name, and account number. And they're just going to pop that money right in there. It's pretty weird at the end. It does feel like it's very immediate. Now, I don't know anybody that's received that money as of shooting this video yet, but it does seem pretty legitimate. I mean, if you're watching the news, you're seeing all the time on there. They're talking about getting this money out fast, and that's why they want to get you this $10,000 advance quickly. So they'll get you the $10,000 so you can spend it, keep people employed, and get the money flowing through the system. And then that gives them time to get their information together, their documents together, to get it to you, so that then you'll see whether you have the loan or not, right? And you can actually look at the terms, make sure they're okay, make sure you want to go ahead and do this. What they are saying is that $10,000 is yours. They want you to spend it, and if they don't approve you for whatever reason, I'm not sure what that will be, you get to keep the $10,000 forgiven, don't have to pay it back as a parting gift. At least that's what we're seeing on TV. And then you just carry on without the loan. If you do get the loan, it's an advance of $10,000 against the total amount. So if you got a $500,000 loan, now you're going to get the remaining $490 after you sign some sort of paper. I'm sure there's some sort of promissory note where you agree to pay it back. It's not secured by anything, not by real estate or anything at all. Not even a personal guarantee attached to it. It's really just tied to your corporation or your LLC or your sole proprietorship or whatever it is. It's just a matter of, if you are approved, it's just a matter of that money being wired into your bank account and starting to make monthly payments at some undisclosed time in the near future. And that's how that works. Now, I'm going to talk about the PPP program next, right? Now, understand this about the PPP program. The PPP program is also through the SBA, except you don't apply directly to the SBA like I just showed you on the SBA website. The PPP program is the brand new program that just came out of the CARES Act, signed by the U.S. federal government right at the end of March. Okay, and they're still funding it. So they're not even taking applications until Friday, April 3rd. Okay, Friday, April 3rd is when applications will be taken, and the applications are not going to be taken by the SBA. The money's going to come from the SBA, but it's going to But the applications are going to be taken and processed by your local banks. So whoever you bank with, I would go to their website right now, or at least after Friday, April 3rd, and try to find out if they have an online application or not. Depending on how big your bank is. If it's a small local bank, they may not have an online application. They may be having you use the SBA forms, which I'm going to show you a copy of. They may have you use the SBA form and then give it to the bank, and the bank will upload it to the SBA somehow. Many of the larger banks are creating their own website because they have such high traffic where you actually apply online digitally. And that's more or less how that works. So I'm going to turn my screen around here and kind of give you an idea of what that looks like. So from the PPP application, this is what that form looks like. And the PPP stands for Paycheck Protection Program. And this is the SBA form here by the Small Business Administration. Again, before you fill this out, check with your bank. They'll either give you this form, but it's not long. It's only 4 pages. It's just about the same length as the other one. This is the one that we do through your bank. Typically, it's going to be online. A lot of these are just disclosures here. They're not. This is designed to be streamlined and very, very, very quick. What you're going to really need to know here is your average monthly payroll, how much you pay on an average month. That's the big determinant here, and the number of jobs you have. Okay, so the PPP Protection Program is really for someone that has payroll. So if you're a solo agent and you don't pay anybody, on a normal payroll, hourly or salary, this program is probably not for you. So this is going to be for the larger real estate teams and real estate brokerages, because it's going to be a determinant of your payroll, right? So what they're going to do is they're going to look at your average monthly payroll, and they're going to take a couple months in the last 12 months. They want you to determine the average of the last 12 months, and then they're going to have you multiply it times 2.5, right? So once you multiply it times 2.5, you're going to have a dollar amount, and that dollar amount is the amount that they will loan you, but actually it's not a loan in all technicality. As a loan, this is not a good program. It's only a 2-year loan. The interest rate's pretty low. They're saying it's going to be 0.5%, so it's a very low rate of interest, but it's only a 2-year loan, so you're going to be making some really steep payments. You have no payments after the first 6 months. Apparently, they give you that amount of time, and then you've got 2 years to get that amount of that loan paid off. And if you're getting a good amount of money, you might be paying off pretty big chunk. Not a whole lot of interest at 0.5% is what they're saying. But 2 years is also what they're saying. So that means you're going to be paying it back kind of quick. So short term, it's great. Long term may not be the best. Here's the trick. If you do not lay anybody out and you use all of these funds towards payroll and or rent or your mortgage or utilities, all the things that keep the business afloat, if you limit this money, it's actually going to be forgiven. Okay, and that's a neat one. So again, if you just use it towards payroll, your office or company rent, or mortgage, or utilities for the office rent mortgage, if you can keep it all limited to that, then this is forgiven. There is no loan, and that's kind of the attractive part about it. Again, unless you have a ton of payroll, you don't have the shot as such a large amount of money as the direct SBA loan that I showed you earlier. Nor are you able to, pay it off over a longer amount of time. However, this one we know is supposed to be able to be forgiven. That's why they call it the Payroll Protection Program, is because it's actually protecting your payroll so you don't lay people off, which is very, very important. Now, so that's the PPP program. As of Friday, check with your bank. Friday, April 3rd, check with your bank and get that application and either use the paper one if it's a small bank. A lot of the larger banks, again, are going to have their own applications, and those applications are going to be online. So check online first. You don't want to be out running around in this environment anyway. So that's that idea. Now, I would apply for both. There's a lot of different opinions about this. I would apply for both. Now, there are rumors that you cannot take both, okay? In other words, you can't accept the loan or sign the documents for the loan for $500,000 and then also take the money, which starts out as a loan that may be forgiven if you apply for it under the PPP program. But I'd apply for both. And that's what, I think a lot of experts are now starting to say too. You may be able to receive both at the same time. That is arguable. I have not seen anything either way that's definitive on that. And certainly in today's environment where things keep changing every week after they roll out these programs, I think I've played it safe. We're telling our clients to apply for both. Most have. So that we can decide later which one we want. We also don't know what amounts they're going to end up loaning us. We don't even, so we might make our decision based on those amounts. So I would apply for both, and let's, before we sign anything or any promise to pay anything back, let's look at the terms, and make our decision based on the terms. That's why we're saying apply for both. That's the plan. Your guess is as good as mine on which one's going to end up being better. But I hope this helps because I do think it's prudent right now for our country that we do this because we need to disperse these funds. I think it's important that we're honest on these applications and that we use them for the right reasons, right? And we don't just hoard the money or we try to keep our businesses going, try to keep our businesses growing for that matter, so that we can do our part and help get through this. So I hope this helps you clarify a little bit of the confusion around that. One of those three should impact and be able to help everyone in the real estate industry, depending on which one suits you best. Hope that helps, guys. Talk to you soon. Thanks again.